First of all, I have to warn you, I'm not a financial advisor. This video is only informative and for entertainment purpose. Hi guys, my name is Anas. In this video, I'm talking about exponential growth of financial markets. What I mean is stock market around the world recently. So the financial markets around the world, US markets, European markets, UK market, Chinese markets, Indian market, all those financial markets are growing very well. And if you look at US markets alone, it's just the growth rate of markets are very fast. Everyone watching in this video, I believe, have some money sitting outside somewhere in the bank, some kind of accounts doing nothing. Effectively, we all are paying some money to the banks to keep this money. In some countries, there is a negative interest as well. We don't have negative interest in UK or Ireland at the moment, but some countries in Europe, I believe, charge negative interest. So money sitting in the bank is getting reduced. And also there's another factor, which is inflation. It's not beating the inflation. Inflation is on an average of 5% going on everywhere, and this money sitting there will be getting reduced year by year, and it's not effectively beating inflation with any kind of interest. If you look at the interest rates in Ireland, it's going to be only nominal, 0.1%, sometimes zero interest. Most accounts in Ireland offer zero interest rates. I believe it's the same all over Europe. It's similar in UK or any other country at the moment. I'm living in Ireland for last 15 years. I never invested in US markets. I always keep invested in Indian markets. For last 15 years, I'm making investments in Indian market, Indian stocks, in Indian stock exchanges. Why I didn't invest in US markets or European markets are the market accessibility, the stock accessibility was very less. So I look for good brokers for last 5 to 10 years, and I couldn't find any good brokers that's easy to buy these financial instruments or good stocks of good companies. So that's the reason why I couldn't start investing in financial instruments from US markets or European markets, living in Ireland. Recently, I found some really good stockbrokers, and they do a very good job in creating very nice platforms, and it is also very cost effective. It wasn't the case before. It was very expensive to trade through those platforms before. Everyone watching this video, doesn't matter where you live, in Ireland, in UK, in Canada, in Australia, or any other part of the world, you can access these financial instruments through good financial brokers, and you can keep invested in good growing markets with the good companies. If you look at the US indies alone, like for example, S&P 500. S&P 500 is Standard & Poor index, company called Standard & Poor, who creates a good index of companies which perform very well. And if you look at S&P 500, the companies in that index grown exponentially for last 5 years. So if you look at the graph, it shows you within 3 years, within 5 years, money you invested in those companies or in those kind of index is doubled. Over 5 years, its growth is more than 100%. It's roughly 125 to 30%. Instead of reducing your savings, reducing your money, you hard-earned money you saved in an account, how you can effectively park this money, how your money can grow is an important thing. So here comes an opportunity for that. These financial markets around the world are exploding, and you can safely park these monies in good financial instruments, and you put away your money there and look at your money grow. There is a safe way to do it. I have done it, and I have achieved a great return over even 3 to 4 months. Last 3 to 4 months, my money is growing very fast. Let's see different markets or different financial indices around the world, how it is doing for last few years, and we'll see where is this growth and which markets are growing and what rate. First, we look at the US market. US market is the one with the major financial activities happening at the moment, and this is one of the index, S&P 500. The index is formulated by a company called Standard & Poor. It's one of the world famous financial index, and S&P 500 is the 500 top companies in that index. If you look at this index, for the last 5 years, S&P 500 returned 115% growth. If you were invested $100 in this index 5 years ago, your $100 should be $200+ now. So as you can see, there is a major dip in 2020. That's the effect of a pandemic. So coronavirus hit the world,
and this index came down in February 2000, started going down in February 2020, and as you can see, it's hit bottom in March, and it started going up again. So it's amazing, guys. You see, within 2 months, so February 21st and March 20. So like within a month, it started growing back, and we never seen something like this before. Like it's a major event happening in the world, a major pandemic, and even with that, this index is growing back. 1 year growth rate of S&P 500 is 30%, more than 30%, 30.24%. US markets are growing so fast. So again, we'll see another index belongs to US markets, which is Dow Jones Industrial Average. This is one of the major industrial average index. So Dow Jones Industrial Average, if you look at that, last 5 years, the last 5 years, it's grown 91.55%. So it's grown more than 91%. And for last 1 year, it's 21.35%. Let's move on to some European indices. So this is Stocks Europe 50. It consists of 50 blue chip companies in Europe. And look at the 5 year chart. And as you can see, it's grown 56.72% over last 5 years. And if you look at 1 year chart, you can see 27.16% over last 1 year. So this is also growing. European companies are also growing, but it's not as fast as the American market or American companies. See same dip in 2020 February here, and it's gone all the way bottom in March. Within 1 month, same like American companies, American indices, it's just rebounds and gone there. This is the time, June 2020. This time, COVID was very high in Europe, so the index stayed same. It took quite a while actually, not 6 months. It took longer than that. It took nearly a year. From there, it started hiking, making all-time highs again. Let's see what's happening in UK. So UK FTSE 100 index contains 100 major companies operating in UK. As you see the maximum chart, it's actually in this line. It's growing, and there's some major dips. We'll see 5 year chart. So that's 5 days. 5 year chart. So if you see the 5 year chart, it's grown 7.6%, 7.68%. So it's still growing. There is growth, but it's not that exponential growth. It's not that fast-paced growth. As you all know, UK after exiting from the European Union, Brexit affected these European indices. UK economy is only recovering from Brexit. It's still under the pre-pandemic level, but it is growing all the time. Now, let's look at one of the fast-growing fast-growing index, which is Nifty 50. That's a major index of India, largest 50 companies of operating from India. As you can see here in the 5 year chart, it's just growing so fast. The trend is only upward. You can see in any other index, it's dipped in February 2020. Same happened here. It's just reverted within a month's time. Came back. It's made the last pre-pandemic level, pandemic dip level, and then it's traveled all, making small dips sometimes, but it's all the way up. Let's go to China, the emerging superpower. Chinese markets, look at the maximum chart. It's grown up so high until 2007, and it started dipping, and it's coming down, and it's made another high in 2015, and it's came down again, and it's not recovered yet, but it is growing. So the last 5 years, it's grown 10.7%, not so high as compared to other markets or as compared to US markets. And last 1 year, it's only 5%. It's gone 5. It's still growing. It's 5%. It is growing. It's better than no growth. As you all know, China has a lot of problems in companies and in the financial markets. So that this chart reflects that. Let's just look at all these comparison of all these major world indices and see which index doing better, and where we can invest and make an exuberant return out of our investment. So basically, as you can see, Nifty 50 is on the top. So India is an emerging market. Indian market is going so fast. So as you can see, this is 5 year average growth chart. So in this chart, this purple color is India, so which is a Nifty 50. So the dip is there, and it's just recovered. But if you compare, the orange graph is the US one. So US financial markets S&P 500 index. So this S&P 500 recovered very quick than any other index after pandemic. So second recovered index is Indian market, and then blue one, which is Nikkei, that's Japanese market, and the other one is the last recovered, so still not recovered index is the UK index, that's FTSE 100 index, and also Chinese market. So that's SSC composite is the yellow one there, the Shanghai Stock Exchange Composite Index. So Chinese market is also not recovered very well. It is growing, but it's not growing in a fast rate as compared to US or Indian markets. Next question is, which market you will go and invest your money? That's a $1 million question, and answer to that question is it's always depends, which market you're investing. So from my point of view, I'm investing in US markets for last few months, and I'm getting a great return. I'm investing in Indian markets all the time. I started investing this year in US and European markets, and I'm making a very good return.
As you see in the graph, financial markets around the world are growing exponentially. It's making all-time highs all the time, week by week, month by month, and year by year. So are we missing out this growth? If we are missing out this growth, we are missing something from an investment point of view. So in order to make this growth, we have to safely invest our money in some financial instruments, which is safe to do so. As you've seen, US markets alone grown around 130% over the last 5 years. S&P 500 index, Dow Jones Industrial Average, it's all grown, it's all shown exponential growth over the last 5 years. So the question is, are we in a bubble, or is this growth going to reverse very soon? Are we in a bubble? We don't know. Nobody knows. But still, we can do a safe investment in the financial instrument. Go and find good growth opportunities, good companies, which will last forever, which will last for long years, which will last for 25 to 30 years at least. Find those companies, put your money in that, and see your money grow, and stick to that investment, and you make sure the company financials are not changing. As long as the company financials are not changing, company performing well, you see the people using the products, or company doing good financially, also good to the society, you stick on to your investment into that company, and it will grow over the time, and it will give you a return more than any bank savings or any other investments. In comparison, US markets are growing in a very fast pace, and so are Indian markets. Chinese markets growth is kind of very slow at the moment, but it is growing. All the markets are growing, but US markets, especially US market and Indian market especially, growing in a very fast mode. Even if this reverse very soon, or even if we are in a bubble, there is an opportunity. There is a way we can safely invest money. So how we do it? You go and find out good companies which are in a good valuation at the moment, at a good price. Always, listen guys, always important to find good companies at good price, and also always important, stick on to your investment for longer time. So for example, if you need this money for next month or even for next year, I wouldn't invest it into a financial instruments, but money you put away for longer term can be very safely parked in financial instrument, and you can get a very good return out of it. Very good return you cannot get anywhere else. So look at all these wealthy people, what they do. They all invest in these financial instruments. They all park their money safely in some kind of financial instruments. So basically, the wealth creation happens only with growing investments. So guys, you've seen the growth in these financial indices. It's just exploding. It's growing so high. It's making highs all the time. It's making highs, new time highs every month, every year. It's just growing more than average. Is this growth subjected to reversal at some stage? Yes, I think so. It will reverse at some time in the future. Nobody knows when it happens. But there is a way we can safely park our money, safely invest in good companies, good financial instrument, and which will give you a decent return. As long as you don't just go with the speculation, and you don't just go with the hype, what happens in the YouTube, or somebody suggesting you hyping about a company, you will be successful in your investment. You can invest money safely in good companies which has sound financial fundamentals, and which is not overvalued. There is a process, there is a way you can find these companies, and you go out there and look at companies, look at financials, and when there is an opportunity you see, you just jump into that and make good investment in that company. In future videos, I'll explain to you which platform I use, how I invest in financial instruments, and what's the return I'm getting. And I hope you enjoy this video. Please give a thumbs up if you do, and please keep tuned. Thank you.